Hey, everybody, and welcome back to another episode. I'm your host, Brandon Cobb, co-founder of HBG Capital. And today I've got Vinki Loomba on the show. She is a visionary entrepreneur, a real estate investor, strategic leader. She's got an extensive background in commercial real estate, information technology, and academia. She's the founder and CEO of Loomba Investment Group, a firm dedicated to helping busy professionals diversify their portfolios and generate passive income through real estate syndication. She brings a unique combination of corporate and entrepreneurial experience, which enables her to offer strategic planning and expert advice. I'm excited to jump into some fun topics today. Welcome to the show.
Thank you so much, Brendan, for having me on your show.
Yeah, this is going to be fun. I know I was on your show a while back and was very impressed at what you've been able to do, how you've been able to navigate the crazy couple years that we've had. I mean, it's been pretty wild what's been going on with commercial real estate, but I think we're kind of coming out of this little deficit, this little correction that we go. Like, what are your thoughts with the current state of the economy and like where we're headed?
I think you said it very well. We are, I think, at the cusp of it now. I think we might be getting better because since we had the first rate cut, and we might have a couple more, at least I'm anticipating, so that we can go into refinancing few of our properties next year, early next year, in the first quarter or the second quarter. That's what we are hoping for. And plus, with the election this year, so
Yeah.
I'm very, very hopeful. And then things gonna pan out for something better. It's not going to be the same situation that we've been in for the last couple of years. Things going to get better than before.
Yeah, I think you're right. Everybody's sort of been sitting on the sidelines. Every 4 years, it's the same thing, 90 to 120 days for the election. Everybody kind of stops buying houses. That's our kind of niche. And I know a lot of people before that will just wait and not do anything long before that if you're like a family office or an accredited investor, because people want to wait to see what the elections do. And so with that behind us with some rate points as well, I think things are going to be a lot different. What is your story? How did you get started in all this? I know that you carry a unique blend of corporate experience with entrepreneurial experience. How did you get started in all this?
It's kind of funny how I got started. My journey in real estate investing is started alongside my long IT and academia career, believe me or not, because like super busy mom at the same time, IT professional, teaching at California State University. Plus, we had a small real estate portfolio of single family homes of our own because when we built our second home, we were in a position to rent the first one. So we learned about the passive income. So we started multiplying. So we had a small little portfolio. So I knew that this is one of the solid alternative investments that I have where I can make money. So when I separated from my corporate position a few years back, I landed right into real estate and I became a full-time entrepreneur. Never looked back into the corporate world since then.
Wow. So made the big switch. And why did you settle on commercial real estate? Or is that how you got started? Did you just off the get-go commercial real estate and you've been involved ever since? Or was this more of an evolution? And how did that take place?
Actually, you can say a little bit both because, like I mentioned, we had a single family portfolio for ourselves that was 20 years back, 20 plus years back. And at the time, I thought this is a good avenue to multiply as your assets and then, kind of invest and grow your wealth. I got my realtor license. I'm a California realtor as well. So I thought I can sell homes. But once I got my license, what I realized was homes, oh no, that's not my cup of tea. I never want to sell homes. I never sold even one home until now. So I got into the retail space because I was more intrigued by the business side of it, how the businesses work and how you can sell businesses or how you work with the businesses. So we started investing in the business side or the retail side of it. So fast forward, when I separated from my position in the corporate world, I landed back into real estate, but more on the commercial side because I had the blend of both the retail and residential. And I was investing with my 401k already in the commercial multifamily space. So it's kind of all blended together. And I got into the active side of it, but with major focus on multifamily investing. Because before that, I did not know about the multifamily investing when I was in
Mhm.
the single family and the retail. So I
Right.
was just doing passive investments. I didn't even know that I could syndicate the deals or I can do it myself. So when I was separated from my corporate job, I was looking for some avenue to become an entrepreneur or just like grow my wealth, because I have a nonprofit which is very close to my heart, is geared towards women and children. So basically, I was looking to make more money, how to fund my initiatives that's geared towards women and children, the initiatives I support in India. So I thought that's the best way for me to multiply my wealth and grow at the same time as an entrepreneur.
Okay. A couple questions around that, but you said
Mhm,
something that I know the audience members have some questions about. You mentioned that you were already investing in real estate using
mhm,
your 401k, and this
mhm.
was, from your corporate world. How did you do that? Because a lot of people don't realize that you can use your 401k to invest in alternative assets and things that are not in just stocks and bonds.
Yeah, a few years ago, I learned by default as well. And I was at a networking session somewhere, and somebody was talking about it, how you can use your 401k, you can roll over to STRA, and from there you're able to invest. You can have a full checkbook control. And actually, not even STRA, this person was talking about the EQRP. So I jumped on it. I started my EQRP. I'm like, oh, I'm not making that much money in my 401k. Let me roll it over. So that's how I got started into the real estate investing or the apartment investing.
Okay, so you did a rollover and then you were able to invest
Mhm.
using that in
Exactly.
other people's deals. You weren't able to use it in like any of your own deals, right? These were like other people's opportunities they had, or were you
Other
able
as
to?
a Exactly, as a passive investor. That's how I started in the commercial real estate. Like you asked me earlier, how did I get started? I started as a passive investor. Then I kind of changed my role to active later on. Because I very quickly I got a chance to be active, because when I started investing as a passive, one of my friends, he reached out to me. He's like, hey, you wanted to co-GP with me in this particular deal. I'm like, yeah, why not? So I hardly say no. So like just wanted to try things. So that's how I got started. So there's no looking back. It's very rewarding. And I love people. I love to talk to people. I love to add value whatever way I can. So it's for me, it's never like, what are you gonna give me? For me, it's always like, what can I give you? How can I add value to you? So I think that worked really well for me. So I was able to expand my network very shortly within the real estate. And then all of a sudden, I just felt like, oh my God, it's such a rewarding place to be in. And I just feel blessed that I get to know so many people, and I'm learning so much from everybody on daily basis. Because again, my motto is I wanted to learn something new every day. That's what I did a long time back. And no matter how big is it or how small is it, everybody has something different or a different perspective than yours. And everybody has something unique to teach you. As long as you have your learning cap on and you are kind of open to receiving, you're going to receive something good from everybody. So without any kind of intentional efforts. So that's what happened with me. And I'm really happy about that.
Yeah, I love that. I think it was Ralph Waldo Emerson who said the quote, "Every man is in some way my superior," and from that I learned from him. And I've really tried to take that to heart too. It sounds like you have as well. What was it about commercial real estate that made you decide on that? Because you had a ton of different other options to choose from.
It's just like, like I said, it's the experience. Like everybody has a unique experience, and then whatever you do in your life is based on your past experiences, believe me or not. Because that's our pattern, because we have been there, done that. It's like, okay, this work didn't work. Let me tweak it. Let me do it this way. So we were in the single family space. We did some retail. I was a California realtor. So it's kind of blend of experience. On top of that, I was in the corporate world for a long time. I was an IT professional. Plus, I taught too. I was in the California State University. I taught for 10, 11 years. Again, in the IT domain, I was an IT professor there. So all that together, kind of shaped me who I am today. And the commercial real estate was just like, I don't have to do much work. I didn't want to deal with tenant, toilets, or termites. My things
Yeah.
were I wanted to have the hands-free investment. So when I started investing passively, the first thing was like, I'm just hiring this person or hiring this company and giving my money. I'm telling them, okay, go make money for me. What could be easier than that?
Yeah. It's a
So
lot of
that
people get
intrigued
into
me. Mhm.
a lot of people get into real estate and they realize that, oh, wow, this isn't as passive as I thought when they're buying single family rental properties and they're doing the HGTV, fix and flip this house. It's a lot of work. It's not truly passive. But as you get into some of these bigger deals, larger assets, especially in the commercial world, it does become a little more hands off, especially if you're investing as an LP, as a passive investor in these deals. How did you start in the commercial world? Because it can be very difficult to break into this stuff. I know that you said you had your solo 401k and you were investing passively, which is a great way to learn, by the way. That's how I kind of started. I invested passively in some syndications with my own money and kind of learned it and went from there. you know, how did you eventually get into the commercial real estate world? Maybe tell us about your first deal you did.
Yeah, like I was saying, I was investing passively. And then when I learned about the multifamily and the passive investing and the syndications, because this was all new to me. Because when you're doing something on your own, you're fix or flip, or you're buying and hold your single family rentals, you are like a small landlord, trying to do everything yourself. It's kind
Yeah.
of a different world. Vision is different, and your perspective is totally different. It's not aligned with the commercial or real estate investing. But when I learned about the multifamily investing, one of my good friends were actually doing it. And I didn't even know. It was like right in my backyard. And we've been friends for last 20 plus years. And then when he separated from his position, he fell into this multifamily investing. So I'm like, okay, if he can do that, I can do that too, because we come from a similar background. So I started investing. I think my first investment was with him too, or no, maybe before him too, I invested with somebody. And right after that, there was another friend who came around, and I was trying to invest in his deal as an LP. So he told me, he's like, oh, you have so many friends and everybody, in your circle, because I have a huge network to begin with, whether it's a corporate world or a real estate world. And then he said, why don't we partner on this deal? How do you feel about that? I'm
Mhm.
like, yeah, why not? So that's how I got started. So, a lot of people, they say I was at the right place at the right time. So I'm going to say maybe one of those moments happen in my
Yeah.
life, but I'm going to say life takes you
Mm.
wherever you need to be. As long as you are true to yourself and you have, set goals in your life. And also, you have this clarity in your path that, oh, okay, this is my goal. I wanted to reach there somewhere, but B, have the patience and then passionate about it.
What year was this that this happened where your friend came to you and said, hey, I got a commercial deal. I want to partner. Do you want to partner? And that's when you truly became like an active investor.
2019.
Okay, so 2019. All right, so interesting time here. So 2019, 5 years ago, right before this crazy roller coaster ride. I mean, things were hot back in 2019. They were really, really hot.
That's
What
true.
did the next few deals, or better yet, what did the next few years look like for you? How I want to break this story down because you've done a very good job of avoiding a lot of the heartbreak that a lot of people have over the last 5 years. And I want to kind of pull a little bit of that out. So let's talk about COVID first. What happened during COVID, the first leg of this roller coaster?
I think COVID was like a blessing for me. Uh, Again, I'm going to say that, I'm going to put it out here. It's all about your perspective, how you're seeing things. The way you're seeing things, that's the way you're going to attract things, because everything is an energy all around you. So whatever energy you're emitting, that's what you're going to attract. So COVID was the best time in my life. Because the thing is, I was able to connect with people via Zoom. I was going to so many networking sessions. I was meeting with so many people via Zoom. And I started my own meetups via Zoom. I was doing my webinars and I was doing multiple networking sessions all through Zoom. So it kind of exploded that time for me to connect with people or make those meaningful friendships that I have today and I still cherish. And many of my friends, I didn't even meet them in person yet. We met through Zoom, but we're so good friends until now. And I
Yeah.
just feel like we're gonna be friends for many, many, many years more.
Yeah. That's really cool. So you're meeting a lot of people. What did the real estate acquisitions look like from 2019 when you got your first one to the end or beginning of 2022, because it was crazy because everything kind of just stopped for a whole year in 2020, right? Like everything froze. A lot of people were freaking out, right? Everyone thought, oh my God, I think my grandma, now that I think about it, I got to give her some crap about this. She thought the world was ending. She was like very religious. She thought that was like this, the second coming and stuff. And so I got to hit her up and be like, do you still think that? Anyway, not to call my grandma and tell her I told you so, but that was very difficult for a lot of people. It froze for a full year. And then holy schmoly, second half of 2021, it came back with a vengeance, man. I mean, it was hot. What did that period look like for you? What did you do during COVID? Did you continue to buy deals or did you pause like everybody else?
Not really. I think I was fortunate enough to find the right partners.
Okay.
And then I got to partner with multiple strong operators during
Uh,
that time too. And we were getting into the deals. And you won't even believe it. In 2021, I think we exited two deals, one in 11 months, one in 18 months, one with 2.2x multiple, one with 70% return and in 18 months. And one of my investors like, oh, you told me you're going to hold on to the deal 5 years. Why early exit? I'm like, do you have a problem with 70% return in 18 months? They're like, no, 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 I'm super happy. I'm like, we exceeded our projections. So I'm saying all the news, whatever people are talking, everybody has a different perspective and everybody has a different way to
yeah.
process that information. So it actually worked out very well for us. And the operators that I work with, my friends, my good friends, they are super strong. I'm not saying that our deals are not struggling. One of our deal was struggling, really, really struggling, right? We didn't even know what to do. But as a general partnership team, we got together, we revived the deal. It was a portfolio. We were able to sell one. And then we were able to return money. That's deal number 3 I'm talking about. And that recently happened. And we were able to return more than 50% of the capital back to the investors. And rest, we put it to the other deals in the portfolio, and which all the deals came back to the track again. So again, I think it depends who your partners are, how strong they are, what their vision is, what the business plan is. It's just like more than getting into the deal. Business plan is very, very important. If you have a strong business plan, and then even stronger thing is how you implement it or how
Mm,
committed you are to the deal. Because the thing is, in real time, you should be 100% dedicated to your vision or to your deals, you call it, the opportunities that you're working through. But if
yeah.
you're not there 100%, if you're just part-time leisure, kind of, it's like my sidekick kind of thing does not pan out the same way.
Yeah. Now that deal that didn't work out, because I want to control the timeline here on your story. That was post interest rate, right? High rise, right? Like that was
Right.
after rates rose in 20. Okay, got you. So during this period, you had a couple deals where you were able to do like 70% plus returns that you got into from 2019 to 2020, and 2021 rolls around, you sell them at the perfect time, like the peak of the
Mhm.
market, 70% returns, everything. What's going through your head right now as you distribute capital back to these investors and hit these grand slams?
I feel really blessed in a way that I was able to make a difference to my investors. And I was able to keep my promise,
Mm,
or the projections actually exceed, because we were hoping for the deal to go 5 years, then have 2x multiple, but we did it in 11 months. So we kind of exceeded the projections. But at the same time, like I say, you can call those one of the unicorn deals, because we can repeat that. That's what we like to do, because we wanted to repeat the process over and over again, find the right deals, find the right people who to partner with, so we can always, bring that kind of returns to our investors. But again, you say past performance, it's a track record. It might happen in the future, might not happen, but we always strive for the similar results for the investors.
right. 100%. Okay. So felt really good about things, had the right partners in place. It's full steam ahead in 2021. What happens next? What kind of acquisitions did you guys do after y'all had sold those home run deals?
We are still in, my portfolio is kind of diverse. I have multifamily. So we invested in a self-storage. It's a ground up self-storage with my partners, and we are in the lease up phase. So we got that about 3 years ago, that one. So this is 24, so 23, 22,
2021.
21.
Okay.
21, we started that. And then we are about, I would say about 40 to 50% already leased up. We got that refinanced this year. So hopefully, we can complete the lease up next year, before the end of next year, and then we should be able to do another refinance on that, return the capital back to the investors, or if there is exit for us, we might exit. All depends how everything is going to pan out next year. So we are very, very hopeful on that one. And beside that, I am part of a BTR community, horizontal multifamily, some call it. And multifamily, I have few of them already, and we have land development just like you. We have a land project in North Carolina. So we're cutting the lots and selling the lots, and we already sold few of them. Those gonna be zoned for the multi-million dollar homes because it's in gated community. So pretty exciting project. So hopefully that's going to complete for us next year, and we'll be able to return the money back to the investors. We're pretty excited about that. And we are also doing condominiums. And we
Mhm.
sold the first phase, few of them already. So that's going to be another good one next year that we're going to be exiting. So other than that, this year I pivoted to industrial. I partnered with one of the strong operators in the industrial. So we got a huge portfolio. We are part of that portfolio. It's about 21 assets in that.
That's awesome. All right. So you've done a lot since then just to take the next leg on this journey. In 2021, you hit some home runs, you started acquiring more assets, and then we get the big rate rise, right? Like this hurt a lot of
Exactly.
people. You
Mhm.
mentioned, and it's going to, I don't care how good of an investor you are, you're going to get affected when you have a black swan event that hasn't happened in 40 years, the fastest rate rise in history. Everyone gets affected. Obviously, you were affected. You said that you had a deal that didn't go as planned, that you weren't really sure what to do, but you ended up turning it into a win. And I know there's a lot of people out there right now, probably some of them even listening, that have been hurt in some way, shape, or form. They're an investor that invested in a bad deal that didn't work out, or they're an active investor that potentially raised some funds for a deal and it didn't work out. Walk us through again how you navigated that whole thing that unfolded with the interest rates. How did you take that from a loss into a win?
So that one actually really a good example, because what happened was, and the credit goes to my whole team, because I say, my the team that I partner with, they're like really, really strong, visionary. They know exactly what they're doing. So what happened was, we didn't have the good property management company who we partner with. So we had to switch our property management company 3 times within
Wow.
2 years, 2 to 3 years. And that kind of brought us really low on the cash. So we passed the distributions, we're not making any distributions either. So, but the thing is, our investors, they trusted us. And thanks to our team, we got together. We were just meeting like maybe more than twice a week just to figure out a strategy. And then we were lucky enough that, I think it's Dot, and this property was in Houston. So our property fell into the eminent domain. So they bought the property from us. So we were like, whoa, it's kind of win-win situation for us. So we were able to return, the money back to the investors. And then part of that, we put in reserves so we can bring the other 2 properties on track. And then the other 2 properties are doing really well now. So we're pretty excited about that. So we might look to some kind of exit next year on those as well.
That's fantastic. All right. So it's just, it goes to show you that if you put your heads together, you can literally solve any problem.
Any problem.
You
Yeah,
you said
exactly.
that you were partnering with world-class operators. That's part of your business strategy, and you're diversifying into multiple assets. Is there any particular niche that you foresee or predict that's going to do better or outperform?
I think multifamily, I'm passionate about that. I always feel like this is gonna do really well. And I was talking earlier, I had another podcast show this morning, and one of the BTR operator, and he was thinking BTR is gonna do really well because people are going towards, more space. And then I kind of agree with him too, but I just feel like people always need space to live. So multifamily always gonna be there. That's gonna be really solid. And BTR, again, it's part of multifamily anyways. And the second to multifamily, I would say industrial will do well because since a lot of manufacturing, a lot of things are coming back home. So that's the reason we just feel like triple net or the absolute triple net, they're gonna do well. And a lot of people, they think self-storage. That's
Yeah.
the another next class to the multifamily and industrial. That's self-storage. These are kind of, I would say, in my perceptions. But again, again, it depends upon where you are. It's pretty localized to, where you are, where you wanted to invest, where your perspective is, or what you're trying to achieve. That
Mhm.
depends on all that as well.
I love it. Going back to 2019, knowing what you know today, what do you wish you had known or done differently?
Oh my God, I would have invested a lot more, lot more. I just feel
Yeah.
like I didn't do enough. I wish I could have started much earlier, not even 2019, like 20 years back. It could have
Mhm.
been totally different ball game. But then I think, had I had all those experiences that brought me here, it wouldn't have been me, the me that I am today. Right. So I needed all that experiences to get here where I am today.
I love it. I love it. I love it. I love it. With all the success that you've had, what's next for you?
Give back. I'm really, really passionate about that. That how can I make a difference? How can I leave this world a little bit better than what we have now? So my goal is to make as much difference as much I can in other people's life, whether it's financially or through my nonprofit initiatives, which is very close to my heart, and geared towards women and children. I just wanted to give that mental space in this women's mind this much space so they can think something else than their daily churn, so they can figure out their life, who they are, and where they can be or where they can take their kids to be.
What is the nonprofit's name and what does it do?
So the nonprofit is a privately held Satya Shakti, my mom and my mother-in-law's name. And we majorly support all the projects in India. Most of the initiatives are done in India. We work with the local NGOs over there so that we pick up the projects. That way we do not have any overhead cost. And we do not take any donations yet because it's not public. And we take our profit share and then we donate that to support this initiatives. We don't even take anything from our investors, but our investors by default, they support our cause because they invest with us and we take our profit share to support these initiatives. So by default, they are supporting our causes.
Man, I love it. I love it. I love it. I love it. You got a big heart. If people
Thank
want
you.
to learn more about you, learn more about your nonprofit, or learn more about your investment company, where can they go?
Best way to reach out to me is LinkedIn. I'm all over the social media, but LinkedIn's good. You can reach out to me through LinkedIn. You can connect with me there. Other than that, you can go to my website, loombainvest.com. And I would love to connect with anybody and add value or make a difference in any life around me. I think that's the best thing, or that's the most happiness I can get when I add value to somebody.
I love it. We'll make sure that that gets posted in the show notes. It's been a pleasure having you on the show today, Vicky.
Thank you so much, Brendan. I really enjoyed our conversation.